When you see the whole world shaking and you feel your heart is breaking, take my hand, no hesitating. When you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains so high we can climb it. Feel it, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains so high we can climb it. Feel it, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Good evening. It's Saturday, October 15th, and it's a little bit before 7. I'm recording a little bit earlier. Have some other things I want to do. But looking at my watch back, my clock back there in the CSG Video Studios. Where it's about 20 after 6, and it's getting a little bit dark already. I put up, I usually just have white lights. I put up, we're heading towards the holidays. So to make it look nice, I have the lights up a little bit here. I'm going to add some more coming up as we go into November. I'm Chris Gojullo. I am an associate broker for eXp Realty, and this is my podcast, Real Estate with Mr. G. And we talk about current events in today's real estate market. And one of the biggest events to talk about is the mortgage rates that are going on right now. I talked about it last week with our podcast that we should wait longer to see if rates will go down. I really don't think that's going to happen in the near future. Okay. We're actually going to have in November another meeting with the Fed funds. They're going to raise the Fed fund rate. That's when banks borrow from the Federal Reserve for their cash reserves. That's going to go up most likely another 0.75 points. And then you have the domino effect, and that will soon affect mortgage rates. So most likely they will go up, all right? And we don't see any of that changing in the near future because the Federal Reserve is still combating with inflation, and inflation is still on the rise, and they want to bring it down. So we definitely see these rates to continually go up. And along with inflation, when you go and you buy You go to the grocery store and you buy your bacon and your eggs and your milk, and you see that goes up, as well as home prices. Now, there's going to be some articles that say some are coming down in different areas, and yes, they are. So I'm going through a whole bunch of stuff before I even get into the meat of my program. But that's what we're going to talk about today. We're going to talk about 4 different ways, or what different 4 different items that affect your mortgage rate. We're going to talk about that today. Okay. So let me do my nice little Americana intro that I really like, and we'll take it from there. Okay, hope you like that. I wanted to do, I said this in an earlier podcast. I wanted to do something different. I don't want to do the dancing videos and the flashing colors, and I wanted to get a piece of Americana in my introduction here, and I hope I have it. Okay, I've been in this business going on 30 years. I've been also a high school teacher, and I just want to be deeper than that, than what people are doing on TikTok or whatever. I might be wrong. I don't know. I want to be me. I've got to be me. All right. So I haven't been drinking. All right. I only been having water with I squeezed there used to be tangerines. Now there's halos and there's smileys, and I didn't have that growing up. You either got an orange, and then around Christmas time they would sell tangerines. Okay, and then there's so many different varieties. I've lost track of it. But anyway, let's get to today's topic, and let's put this on the stream. And I'm going to make myself a nice little bubble. So I can show more of the screen. Okay. And we have a nice, lovely little picture here. And we see, I'm going to say, because he's gray-haired, it's just the grandfather with the granddaughter. I'm not going to, I'm assuming that. It could have been, maybe that's his daughter. I don't know, but I'm going to go with, because he has a gray. He looks a little older. It looks like he's in his 50s, maybe 60s, and he's with this young lady here, and it looks like they are not playing. With they're not Legos. They're little blocks, and so that looks cute. And so. When you're looking for a home, you want to look for the lowest interest rate as possible. But we've seen these go up, these mortgage rates go up dramatically. And, from a year ago, we were at 3%. Now we're at 7%. All right. So that's more than doubled within relatively a short period of time, right? For the longest time, we had really low interest rates, and now they shot up like 4 points, and that's a shocker for a lot of people. It really is. So if you're looking for ways to combat today's higher rates and lock in the lowest you can, here are a few factors to focus on. Since approval opportunities can vary, connect with a trusted lender for customized advice, meaning a mortgage loan officer. And again, I'm going to introduce what programs you have out there and how to go about, in this case, getting the best rate. But the professional who could go over all their mortgage programs and what's available is your mortgage loan officer. Okay, I could give you categories, let's put it that way, but I can't be specific, and I don't want to be specific because that's not my job as a realtor, as an associate broker. Is to say this is what's out there. You could look at FHA, you could look at VA, you could look at USDA. I know which ones that you just have to put down 3% or 3.5%, and if you go conventional, maybe 10%. I could tell you those generalities, okay, but it's the loan officer. They'll go into more specific detail, okay, and give you an idea what your mortgage payment would be, okay, and what it would be with which program, which mortgage product you go with. All right. So I'm just introducing it to you. But the big, right now we're going to talk about credit scores. And of course, the better your credit rating, okay, the lower your mortgage rate will be because you're less of a risk. If you're showing that you are paying your credit lines on time, all right, maybe doing it earlier than not the closing date, but the date that it's due, the due date, and you may be paying a little bit more, than the minimum amount. This all looks good, right? When you build and maintain strong credit, mortgage lenders have greater confidence when you qualify you for a mortgage because they see what you've paid back your loans as agreed and use your credit wisely. Strong credit also means your lender is more apt to approve you for a mortgage and has more favorable terms and lower interest rate. All right. So making sure that you are keeping on top of your bills, even with your credit lines, they want you to be, if you have a balance on the credit line, it shouldn't be more than 30% of your credit amount that they're able to give you. So if you have a credit line of $1,000, you shouldn't have more than $300 as a running balance on it. That helps as well, right? Not just paying on time, but trying to keep those balances low on your credit cards. And of course, with a car loan, you just have one fixed rate that you're paying, a fixed amount. Well, even with a credit card, though, but that varies, right? That changes as your balances go down on the credit card. Your minimum payment goes down as well. If you have a car loan, that stays the same until the end of the loan. Okay, so your loan type will also be different as for dealing with mortgage rates. There are many types of loans, each offering different terms for qualified buyers. So there are several broad categories of mortgage loans, such as conventional, FHA, USDA, and VA loans. Lenders decide which products to offer, and loan types have different eligibility requirements. Rates can be significantly different depending on what loan type you choose. All right. Now, in this area here, I've done a lot. Probably the majority of my mortgages for my clients have been FHA. USDA is a little bit different because you only could use it in certain areas. All right. So, and they're usually more of an area that's more, let's say, country. It's not city and it's not suburban, but it's an area that there's probably a lot of spaces between the homes. There's really not that much amenities out there like shopping malls, all right, movie theaters. And what USDA wants to do is to develop these areas so they become more populated, so more businesses will go out there. And then not only businesses, then maybe hospitals will build out there. So they might say, well, let's build a park now, okay? Or let's build a pool so the local residents could use that, a public pool. So that helps build up the area. If businesses see a need for their company to be in a certain area because it's developing, there's more people going in that area, and they're going to say, well, we need more Harris Teeter's to go out there, the grocery stores, or the food lines, okay? The Ace Hardware stores, and that helps build up an area. So you get that with your state, because sometimes they give you grants. They'll give you, they'll help you out perhaps maybe with your down payments. So it's a good program. We have your loan term, and basically there is some, probably with any type of loan that you take out, you could see if they have a 15-year mortgage instead of a 30-year mortgage. All right. Now, of course, your mortgage payment would be higher, okay, because you're paying off that loan now in 15 years. But if you could afford it, and in 15 years you own your house free and clear, that's a pretty good thing. All right. You could also, like if you have a 30-year mortgage and if you want to make extra payments to it to shorten the term of the loan, you could do that as well. So if there's a month where you can't really double your payment or make an extra payment, it's not going to be a problem. You're not going to be behind in your mortgage payments, right? So, but if you looked at the 15-year version of your mortgage and you say, well, I really could do this, then go for it, because once it's set there and you could comfortably afford it, then you'll pay that loan off a lot faster and own your house 100%. Okay. Because a lot of people will say, all right, I'll make an extra payment. I'll do a 30-year mortgage, but I'll make extra payments. A lot of times then you don't. You get, the holidays come, you want to buy some stuff. And you have to be very, very, very disciplined to make those extra payments or double up on your payments. So when choosing the right home loan for you, it's important to consider the loan term, which is the length of time it would take you to repay your loan before you fully own your home. Your loan term would affect your interest rate, monthly payments, and the total amount of interest you will pay over the life of your loan. Now, again, with interest payments, if you're paying off your loan 15 years earlier than a 30-year mortgage, that is a less risky loan for the bank, all right? Because you're building up your equity, you're owning more of your house, you're paying it off a lot faster, so most likely you will get a lower interest rate on that, okay? And then your down payment, all right? Now, the down payment works in different ways, all right? In general, a larger down payment means a lower interest rate because lenders see a lower level of risk when you have more stake in your property or more equity in your property. So if you can comfortably put 20% or more down, do it. You usually will get a lower interest rate, okay? So they're saying, hey, this person's really determined and they're going to put down 20% instead of 3.5%. Most likely, they will give you the lower interest rate. And the other point, too, of course, if you can put down 20% as opposed to 3.5 on an FHA mortgage, which is their minimum required down payment, you're definitely going to have a lower mortgage payment, even if it would stay at the same interest rate, all right? Because you're taking out less of a loan. But if you put down more, like I said, you have a plus there. But then if they lower your interest rate, you have it's a win-win situation, all right? So that's good. So there are different factors, right, on determining on how to lower your mortgage rate. And I'm going to close this out over here and put my happy face back up here big. Now, just to give you an idea, and I didn't want to go into specifics of the different type of loans, but I'm going to show you one graphic here. I think it's going to come out a little small, which I'm a little concerned about that. So you have your loan options, your USDA versus your FHA. So on the left, okay, the way you're looking at it, it's a 0 down payment, as opposed to the right, a 3.5 down payment. Lower payment here. I'm having a little hard time reading it. I should have. Well, no, they're talking about the mortgage insurance. So for some reason, and I'm not going to go into detail with that, but with your mortgage insurance, for some reason, it's less of a premium, but with FHA, it's higher. I'm not going to touch that. I'm going to let the loan officer go into more detail about that. The credit qualifications on the USDA, your minimum score is needed 600. FHA is 580. And income loan and property restrictions, must buy home in targeted area. And see, that's the thing about USDA, because again, it's going to be in areas where they would want to see more economic development. So you can't use that anywhere, right? Count the income units, no loan limits. Okay. That came out a little bit smaller. I apologize. All right. They're saying there's no loan limits on FHA. You will have loan limits. It depends on that county. So if they say they just raised it, so if they say in Hampton Roads the minimum or the maximum you could take out a loan for is using FHA is $468,000, then that's it. Then if the house was over that amount, you would have to come in with cash, or perhaps finance that with another product. All right. But with USDA, you do not have a loan limit. Okay, now I see. To the left, where it says county income limits. Okay. I think really what it means there, as opposed to, well, if the USDA, well, I apologize. I'm having a hard time reading that. Now, on the FHA loan, when it talks about county loan limits, again, it's for that area. If we were up in New York, the loan limit will be much higher because your average homes there are much more expensive than they are in Hampton Roads. Okay. So I thought I would just also show from last week this nice little video on, because it's a nice little review, because everybody would like to lower their mortgage payments, especially with interest rates going up. So let me show you this as a review. So ask your loan officer if you could buy down the interest rate. Okay. Now, what we just discussed, by giving a larger down payment, if you could go up to 20%, you are showing the bank there is less risk in that loan, and you will get a low interest rate. But you could also buy down the rate. It won't be cost you as much as going from a 3.5 down payment to 20%, but you could buy down the interest rate. And it could save you some money, not a whole lot of money, depending on how much you could buy it down. And you could ask the seller to do this, because with some loans, like for VA loans, you could ask up to 6% from the seller to be used for closing costs, and then if you wanted to buy down the rate. And it could be something that's not coming out of your pocket. So number 2 is making a larger down payment. You could inquire about any type of grant programs. If by chance you are buying a home in an area that USDA will pick up, they most likely will have a grant programs. But there are other grant programs out there where you do not have to pay the money back. I added this one because I've had clients who had really expensive cars, and in order to be eligible for the amount of money that they wanted, they had to either get rid of the car, or, if they're able to refinance the car maybe at a lower rate and have a lower monthly car payment, that would be good. Sometimes I had people, they will just trade in an expensive car and purchase another because their monthly payment was much too high and it raised their debt to income. This is another one that consider an adjustable rate mortgage. They're safer now than they were in the 2000s, okay? Because what the banks will do now, they will approve you at the higher rate. So let's say it was adjustable rate mortgage that went up to, let's say, 9%. They would see if you could afford that mortgage with a 9% monthly mortgage payment, whatever that would be. Instead of just saying, okay, 2%, you could afford it. And that's what happened prior to the crash of the real estate market. But now when you take it, they'll say, well, the highest could go is 9%. If you could afford it at this time, at this present time, you could afford it at 9%, then we will give you the adjustable rate mortgage. Now, the adjustable rate mortgage is good in the scenario where you may just want to stay in this house for 5 to 7 years, whatever. It's not long term, and you kind of get out of the house. You sell it before those higher interest rates kick in. But if you do stay longer, you always have the ability to refinance it. And hopefully when you refinance it, the current fixed rates are lower than where you are at the rising mortgage rates. And I just throw this in here. Buy now rather than late as rates increase. Did I keep the video on that? Okay. All right. Let me get this graphic out of here. And I had another video, but we're already going at 30 minutes. I just want to remind you that I have now the Buying a Home, the fall edition, came out about 3 weeks ago. And we have selling things to do when you consider selling your home. And you could go to my blog site. And let me get it up over here. Right there. Real Estate with Mr. G.blog. And you go to resource materials. You'll see that tab in the menu on the first page. And you can just click that, or you could just type the entire thing. Okay, and these will give you ideas of what's going on. It has current events. But then you call Mr. G to either buy or sell, and I will help you to reach that goal. Okay? All right, so let's get rid of this. Okay. And so I'm hearing from my producer, William Burgers, that we have a couple in the audience with an unusual skill.
Yes, Chris, we have a famous couple in the audience. Originally from Lithuania, Stanislava and Philip Shinkas have spinned many different items since they were toddlers. Originally a vaudeville act, you can now rent them for birthdays, weddings and bar mitzvahs. Ladies and gentlemen, the Shinkas.
All right. Okay. All right. So that's it for today's episode. Hope you learned a lot from it. I'm going to call out to my mortgage loan officers and see if anybody wants to do a podcast with me, come in as a guest, and we could talk more into detail about ways to perhaps lower your mortgage rates. And that usually then brings in a couple of products that they have. So I'm going to reach out to my loan officers and see who wants to come aboard and give that information. Okay? All right, so for that's it for this week's podcast. And we're getting close to the holidays. Should be exciting. Soon Halloween will be here. A lot of people have already decorated. And one thing I did want to say, the wife and I, we got our booster, and it has some sort of weird name to it. It's the third one. And I think it's a good idea to get these boosters. The pharmacist said this will be good now for a year. So a year from now, we'll again take our flu shot and our booster shot then for COVID. And knock on wood, as far as I know, knocking on wood, I have a little cover over here. I have not gotten COVID-19, nor my wife, as far as we know. And we've been careful, and then we took our shots, and hopefully that's why it's happening. We don't want to go backwards to where we were 2 years ago. Hopefully this pandemic is in the rearview mirror, and we could go on with life as it should be. All right? So keep that in mind. Be kind to each other. And remember, the greatest power we have is to love, and the greatest gift, each other. And I'll see you next week.